This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, December 9th, 2014. Euro dollar. So the market is attempting to establish a little bit of a recovery after breaking to a fresh 2014 low at 122.47 on Monday. But the overall price action and the trend continues to favor the downside, with the market locked within this downtrend over the past several months and well capped below the 50-day moving average. Look for a break back below the recent low at 122.47 to expose that 2012 base at 120.40 further down. Ultimately, only back above the 50-day moving average would compromise the bearish structure. Sterling dollar. Cable has rebounded a little bit after breaking to another 2014 low at 155.41 on Monday, but the market would need to break back above 158.26 to compromise the current downside pressure and open the door for a bit of a correction. Inability to take out 158.26 will keep the pressure on the downside, with the market focused on another break below 55.41 and towards a measured move at 53.50 further down. Dollar yen. Dollar yen is finally seeing a bit of a correction after breaking to a fresh 7-year high on Monday at 121.85. The market is now dropping from overbought studies on the daily chart, but is still tracking well overbought on the weekly and monthly charts to suggest that we could still see additional corrective activity before bull trend resumption. The key indicator in dollar yen right now is the 10-day moving average. The market has been unable to establish below the 10-day moving average since mid-October, and a break back below this moving average would do a good job of triggering the onset of a anticipated correction, where the market will then look to carve out the next medium-term higher low. The 10-day moving average comes in at 119.30, so a break below there would be required to trigger the shift. Inability to take out the 10-day moving average will keep the immediate focus on the top side, with a potential retest of the recent highs at 121.85 and beyond. Euro Swiss. Euro Swiss continues to consolidate just off its recent yearly lows at 120.09 that fell shy of the major psychological barrier at 120. But until the market can establish back above 2045, the pressure remains on the downside, and the possibility for a retest of 120 still exists. Aussie dollar. Aussie dollar has extended declines yet again, breaking down below the most recent figure at 83, trading to 82.23 ahead of this latest minor bounce into Tuesday trade. But the market remains locked within a well-defined downtrend, and any rallies that we see over the coming sessions should continue to be very well capped below that previous support turn resistance in the 85.50 area. Look for a breakdown that takes us back towards a measured move objective at 81.75, below which exposes critical psychological barriers at 80. Ultimately, only back above 89.11 would compromise the current bearish outlook. Dollar CAD. Dollar CAD is finally broken up above the previous 2014 high at 14.67 to pierce through 115 on Tuesday. The market remains highly constructive, and the focus now is over the medium term is on a move towards 117.50, which is a measured move objective off of a recent price action. Any setbacks are expected to be very well supported ahead of 113 that is, while only back below that recent higher low at 11.91 would compromise the bullish outlook. Kiwi dollar. Kiwi dollar is broken down below recent support at 76.60. That was the previous 2014 base, and this opens the door for the next major downside extension in the market towards 72.85, which is a measured move objective. Ultimately, only back above 80.35 would compromise the bearish outlook, with any rallies now seen very well capped into the 20-day moving average, which currently comes in around 78.30. SPX 500. The S&P 500 looks like it could be carving a double top on the daily chart with a break below the neckline at 2049, which represents that low from the 1st of December required to trigger the onset or the formation of the double top. A break and close below 2049 would open the door for deeper setbacks towards the 2025-2030 area, which coincides with the low from the 17th of November. Should we get down there, the market could be then looking to establish a more meaningful top, but that remains to be seen at this point. An inability to take out 2049 on Tuesday will keep the pressure on the top side, with a focus on a retest of the recent 2080 record highs and then towards the psychological barriers at 21 further up. Gold remains locked within in the middle of recent range extremes at 1256 and 1131. 1131 represents the recent 2014 low and the multi-year low that was set back on the 7th of November, while 1256 is the most recent medium-term lower top. A break above 1256 will be required to compromise the current bearish outlook, while inability to take out 1256 keeps the market looking for the next lower top ahead of a downside extension back towards and eventually below 1131. At current levels, the market is tracking in neutral territory and no clear bias is seen. That's all for today. Have a good one.